It's another thing to hear it from the ECB, and that's exactly what they're saying. You have them coming out and saying it's a threat to the entire system.
Get ready, because the European Central Bank just dropped a bombshell, calling the current state of commodity markets a threat to the entire system, specifically pointing to the opaque, leveraged world of physical gold. This isn't just theory. We'll dive into how this shocking admission from the ECB validates everything experts like Schectman have been warning us about, revealing the startling vulnerabilities in the very foundations of global finance. You won't believe what's truly happening behind the scenes in the gold market.
It's another thing to hear it from the ECB, and that's exactly what they're saying. You have them coming out and saying it's a threat to the entire system. That is one of the craziest things that I've read in a long time. I'll read it to you. You know, the EC is one thing for you and I to say all of these things, but it's another thing to hear it from the ECB. It talks about vulnerabilities have arisen because of commodity markets tend to be concentrated amongst a few large firms, often involving leverage and a high degree of opacity deriving from the use of OTC derivatives. Margin calls and the unwinding of leverage positions could lead to liquidity stress amongst market participants, potentially propagating the shock through the wider financial system. Additionally, disruptions in the physical gold market could increase the risk of a squeeze. In this case, market participants could be subject to significant margin calls and/or have trouble sourcing and transporting appropriate physical gold for delivery in derivative contracts, leaving themselves exposed to potentially large losses. Well, that sounds like what we've been talking about for a long time. And that's, you know, look at the LBMA, 8 weeks delivery on a T+1 exchange, opaque. Yeah, no one knows what's going on there. And the leverage that these physical gold market participants are engaged in, that's exactly what they're saying. You have them coming out and saying it's a threat to the entire system. Well, you're darn right it is. And this is what is being exploited by much of the world right now because they understand just what we're doing. The LBMA uses a ton of unallocated gold accounts where you have several parties claiming the same amounts. That's what the Hunt brothers noticed in 1980. And it disconnects reality from paper. I mean, it's the reality is that there's many times more contracts than there are ounces to deliver. And I think this has been exposed. I often cite what the folks said with the BRICS grain exchange. We produce and consume more grain than the West does, but with the development but the price is controlled on COMEX, we can't control it. But with the development of the grain exchange, this will change. I think they understand it. The world understands it. One thing I wanted to mention, I was looking at, you know, Vince Lancy has a very good take on the markets. And I was looking at a string of texts between him and Luke Roman and talking about Vince is basically saying that we were that close to a major international regulatory crisis and it was averted. And he says, now it makes sense. I want to read something to you and give all the credit to Vince and to Luke, but I think people should hear this because it's really kind of crazy if it's true. He says, the COMEX delivery that was shut down, the extended shell games of metal going on for months, the seeming liquidation only behavior, meaning they basically got together and said, no buying, fellas, no buying, only selling. And I don't know if that's true or not, but he says the seeming liquidation only behavior, bullion banks covered shorts and funds sold. Normally, funds would not let the banks off the hook. This market became liquidation only. It was so bad. Have been involved on both sides of the table with those. It's a lockdown, circle the wagons type panic. We came close to a serious problem. It was near a meltdown in the gold market. Physical gold wasn't available to meet delivery promises, so major players scrambled behind the scenes. Bullion banks were in trouble. Big funds bailed by selling, letting the banks off the hook. The market got so shaky they made it liquidation only. You could sell but not buy. It was full panic mode, but they managed to patch it up before it blew up publicly. It shows the system isn't as solid as it looks. If people can't count on getting real gold when they want it, trust in the market could break down. Going forward, more investors might avoid paper market and demand blah.
Honestly, hearing the ECB finally admit the deep-seated vulnerabilities in commodity markets, particularly with that high degree of opacity and leverage, feels like a vindication of everything I've been discussing. The sheer audacity of a liquidation-only scenario in the gold market, as Vince Lancy describes, is a chilling confirmation of how precarious the system truly is. It only strengthens my conviction that true assets, not paper promises, are the only real safeguard.
Now, Luke Groman says, now imagine what happens if it was the U.S. government bringing the gold back, and the response to all of the above, talking about the banks, from the U.S. government is F you. Send us more gold this month and next month too, and more behind for July, August, and September. Vince then says, it was, Luke, it was. No ifs, ands, or buts. You know it. Bullion banks to cover the Treasury, calling it back, or the Department of Treasury itself, it most certainly was. So here you have two of the smartest guys on the planet, more or less saying that we're this close to watching the whole COMEX blow up because of all of the delivery requests. Well, who's standing for delivery? Over 16,000 contracts so far in May. He's saying it's the government. And the government says, I don't care how stupid you are that you're short. Give me the gold. And he says it was just narrowly averted. At the same time, we see China, their gold imports into the country were 127.5 metric tons for the month, an 11-month high. The world is continuing to ask for delivery. This is where everything breaks. This is how everything breaks. And if you go back to 2020 and I started talking to you about the deliveries off of COMEX, it started then and it's accelerating now. And since 2020, it's been a common theme. Prior to 2020, it was a never theme. No one stood for delivery. And when you see the LBMA go from T+1 to T+8 weeks, when you see a guy like Luke and Vince say this is a disaster averted on COMEX and it's the U.S. government standing for delivery, things are starting to come into focus. And the rest of the world understands this. And that's why you see them at the same time standing for delivery. Things are getting really, 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 really interesting as far as I'm concerned in the gold market. The resilience, and I think silver's not far behind. You look at the technicals, they're identical with the exception of gold has broken up through the handle. Silver is right there at the technical resistance level. But look, what is different to me is that you have willing buyers throughout the world standing right underneath the 200-day moving average. And if they are foolish enough to use their bullets to suppress it, you have people standing there, countries, sovereign wealth funds, central banks saying, okay, we'll buy it and we'll stand for delivery. And you're seeing this. This is a wake-up call to the participants of the gold market and to those that are silly enough to be naked short. It exacerbates it. If there's not demand at these levels and the Fed has to come in to prop it up, to keep rates from blowing up. But if there isn't demand and you see auctions that haven't failed but have very lackluster demand, and who knows how much the Fed or shadow entities that represent the Fed in the Cayman Islands or whatever are bidding this stuff up, it will just become obvious at some point that that's the debt spiral, rising rates, and more money printing to buy the bonds to keep it down, and it just goes on and on and on and on. We're right there. So that's the point. That's why we're trapped. At some point, there's always a buyer for the debt at some rate, but there doesn't seem to be much appetite at these levels. So you're beginning to see rates start to move into levels that in months past have started to rattle the system, the banking system in particular. But if they do jump in, they've lost all credibility. And, Trump wants the rates lower. But remember, our dollar's lost 9% already. So how do you run a world reserve currency with all of this debt, with rates that are not commensurate with the falling of the dollar and the debt accumulation? No one wants to buy it, let alone the way that we behave with these countries, threatening them with sanctions and tariffs. They're finding alternatives. They truly are finding alternatives, and it's becoming very obvious to me. So yes, that is the playbook, come in and rescue the day. But if they do that, where's the credibility and where is the demand for treasuries when you look at a country that is resolved to never normalizing their balance sheet. And that's why people are saying that Japan's going to do the same thing right now. After all of these years of suppressing rates, the Japanese government owns 52% of the bond market. Well, you know, where's their credibility? As rates go higher in an attempt to normalize their balance sheet and sell those treasuries into the market, they too have the who to problem. Who do they sell them to? Who wants them? Everyone else is gone. And we're beginning to witness a similar pattern here where the big buyers of our treasuries are moving in the other direction. And you take away the carry trade, rocket fuel, where people can borrow money in low priced yen and then convert to dollars and buy Nvidia or Bitcoin or Apple or treasuries at that spread. Now that's disappearing very quickly. The unwinding of the carry trade can be just as viciously bearish as the ability to use the carry trade. So yeah, these are dangerous times for certain. And I think it all is going to be centered around the debt markets, which are far bigger than anything else, far bigger than the Federal Reserve has the ability to contain. And we can see that by them coming in and buying the 3, the 30, or the 3, the 10, and the 30, and the rates are still climbing even with that participation by the Fed.
If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. Hearing about the near meltdown in the gold market directly impacts my strategy going forward. It's clear that true ownership, not just paper claims, is paramount. I'm focusing on assets I can physically hold. You should be doing the same. Begin exploring reputable avenues for acquiring physical precious metals. We hope you found this video helpful. If you did, please like and subscribe to our YouTube channel so you don't miss out on future uploads.